Let us have a clear conversation, a serious conversation about EIN-only, business lines of credit from a big bank. How do you get a large amount no matter what? Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about how to get approved for a large EIN-only business line of credit from a big bank. A large amount, a significant amount, no matter what. Okay, the first thing you need to do here, folks, you need to understand and know the top players in this field. So when we talk about big national banks, who are we talking about exactly? So we have business lines of credit from Chase. Okay, here you get 10,000 to $500,000. Very great. And the cool thing here is that you have affordable rates. You are also talking about Bank of America. Here the rates, the line amounts starts from $10,000 and the APR as low as 4.5%. Wonderful. And we are talking about Wells Fargo, another big player here. And you have lines that go from $5,000 to $100,000, and the rates are as low as prime plus 1.75%. You also have another player. You have the PNC Bank, and what we love with PNC lines of credit is that they do have a constellation of lines of credit. So they have the small business line of credit. This is really good. Here, the amount oscillates from $20,000 to $100,000. We love the fact that the loan application or line application is very fast. You also have the secured small business line of credit with PNC. This is really good if you have assets that you can collateralize. Okay, and here the line amounts go from $100,000 to $3 million. You also have Citibank. Citibank also has a constellation of business lines of credit, very good ones, and the line amount go from $10,000 to $250,000. This is for what they call the business credit account. But if you want the relationship ready credit, then you have you can go from $250,000 all the way to $5 million. This is just wonderful. And what they mean by a relationship ready credit, it means that you need to have an MPR with Citi. You need to have a multi-product relationship with Citi. We also have Truist. So this is SunTrust now is called Truist. And here they have a small business line of credit up to $100,000, okay? And they have low variable rates. You do have a U.S. Bank. U.S. Bank has a constellation also of business lines of credit. So they have the cash flow manager up to $250,000. You have the business line of credit up to $1 million. You have the business equity line of credit up to $500,000. So it's really important to understand who the players are. So I just wanted to quickly give you the big names that we're talking about. And so if your job is to get a bank business line of credit, EIN only, or without EIN for that matter, no matter what, you need to understand who the players are and what the amounts are as well as the requirements. Speaking of which, let me talk to you about the requirements. Big decision time, big decision time. Talk to me. Do you want to be unstoppable? Do you want to have do you want to be unstoppable in your application for a business line of credit with all the big national banks? Well, first of all, you need to have, your business must have an operational history that ranges from 18 to 24 months. So if you are a startup or a very young business, you may not qualify. Again, I say may because if you have a strong relationship with the bank, you could qualify. But generally, the requirements are 18 to 24 months. Your income, the revenue rather, the gross revenue should be between 120K to 250K. That's gross income, okay? So that's the minimum 120K to 250K. You need to have an EIN. Don't talk to me about, oh, I don't need an EIN. I want to remain a sole proprietorship. Get out of there. No. Get out of here. You don't want that. You want to, if your goal is to be unstoppable and get a high EIN only bank business line of credit, you need to incorporate. You got to become an LLC, you got to become an LP, an S Corp, a C Corp. I want you to think about segregating your personal affairs from your business's affairs. Okay, you want to get an EIN. You want to also think about opening a business checking account or business savings account. You got to have those two. Those are important. Okay, and some banks want you to have a paydex score, a DNB paydex score of 70. That's the minimum. And if you don't have an EIN or you don't want to apply for this business lines of credit with EIN, then your FICO must be above 650 or above 550 if you have an MPR with the bank. And you also have some liquidity requirements, okay? So you want to have strong cash reserves or strong cash flows. So when we talk about cash flows here, we are speaking about cash inflows versus cash outflows. Very important. And you need to have a well-constructed business plan. I don't care what, the funny thing is people are thinking you only need a business plan if you're seeking investor money. No, my friend. If your goal is to be unstoppable and you want to get the business line of credit that you need, that your business needs to expand, okay, then you need to have a business plan. A business plan is good not only for investors, but also for lenders. I want you to write it down. A business plan is great for investors, but also for lenders. Very, very important. The third step rather. So step number one, you need to know who the players are. Step number two, you need to know the requirements. The third step is I want you to have a conversation with me about the condition of your business. Okay, I want you to talk to me about your business's performance. Are you making money? Are you losing money? Is your balance sheet languid, lethargic, or active and vibrant? Talk to me about that. You want to be unstoppable, but your business's metrics are not unstoppable. This is not going to cut it. You better really fix that. So you need to think about your business's performance. So you also need to think about your financial statements because the bank is going to require it. The bank you're going to is going to require your financial statements. And please don't give them 2 or 3 financial statements. When we talk about a complete set of financial statements, we are speaking about what? We are speaking about 4 financial statements, okay? So you have the balance sheet that you know about. Everybody knows about the balance sheet. You know about the income statements, okay? But you know about the statement of cash flows. But most importantly, you also need to include your statement of owner's equity. The bank wants to see who is behind this company, who are the founders, who are the equity holders. So this is important. So when we talk about a statement of cash flows, which is important because a business line of credit brings more cash into your business, you want to pay attention to the 3 main sections of that statement. We are speaking about what? We are speaking about statement. We're speaking about cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. And bankers want to pay attention to cash flows from financing activities because when you get a business line of credit from Citibank, Wells Fargo, Chase, or whatever, you're going to put that money into the cash flows from financing activities. It is a financing activity. So you want to pay attention to that, okay? And also when we talk about the condition of your business, you need to think about the business plan. I spoke earlier about the business plan, but here you need to articulate, okay, if you will, the vision for the business. Where do you see yourself? Where do you see the business 1 year from now, 3 years from now? Because if the bank is going to give you a line of credit, a huge line of credit, they better understand how you're going to use the money to expand your business. How are you going to use the money to make more money? It's all about the ka-ching, ka-ching, ka-ching. Talk to me about that. Have you thought about it? Okay, how is this line of credit helping you make more money? Think about it, and I want you to talk to me about that. Write it down. You need to have a clear vision, and you need to have a clear mission. Very important. Let us talk about the assets. So if your goal is to get a business line of credit with EIN only from a big national bank, you need to clearly understand the kind of assets your business has. Okay, so here what I want to do is I want you to look at the balance sheet because this is where your assets are located. your short-term assets and your long-term assets. And when we talk about short-term versus long-term, you need to have a nice balance here, okay? And when we talk about having a clear indication of your assets, where am I getting it? I'm getting at something called collateralization. Because if you know the asset that you have, you know the quality of those assets, you can collateralize them, you can pledge them, okay? You could get approved for an unsecured business line of credit, and that's all we all want, right? It's all about being unstoppable. But what if the bank doesn't want to give you that much money on an unsecured basis? But then you're going to have to secure the business line of credit. And if you have to secure it, then you have to think about the assets that you have, the strength of the company's assets. Are they liquid? Can the bank sell them? Are they monetizable? That's the key word here. Monetization, right? See, it's really important because the bank is looking at you and your business, and they're thinking about their current exposure to you. Because at the end of the day, when we talk about business loans, business line of credits, business SBA, all this kind of financing, the bank is looking at how they can cover their ass, how they can mitigate their risk, how they can mitigate their exposure to you, to your business. They're thinking about default risk. They're thinking about credit risk, right? So when you think about assets, your company's assets, you need to think about your DTI also, your debt to income ratio. Very important because debt is part of a balance sheet. And when we have an analysis of the balance sheet, including the assets, we got to look at the other parts. We got to look at the other part of the equation, the liabilities. You also have to think about your CUR, your credit utilization ratio. The bank is going to look at that to see whether or not you have access to enough liquidity right now. Because the bank is going to look at your business loans, your outstanding credit card balances. They're going to look at other liabilities that you may have, either short-term or long-term. This analysis is done not only at the individual level, in other words, based on the lender, but also at the collective level. They look at all your lenders. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. We are still having a conversation about how to get an EIN-ONLY, a large business line of credit from a big national bank, no matter what. So the fifth step number 5, we need to think about MPR. This is a concept that we actually use internally in our research. And when we speak about MPR, we are speaking about multi-product relationship. Please. We have heard on YouTube and on other websites that people are telling viewers that an MPR must include debt accounts, all of your accounts with the bank. No, we came up with this concept. It's a concept that we use internally for our research. The MPR that we talk about, you will never hear or see MPR mentioned anywhere on the web, on the internet. It is a concept that we use internally and that we came up with. One thing I want to say here is that when you think about MPR, I want you to think about money, 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 money. In other words, you want to think about your deposit accounts, no liability accounts, no debt accounts, no credit card, no loans, no mortgages, no. You only want to focus on deposit accounts. Don't let anybody fool you. Don't let anybody tell you the opposite. So you want to think about the bank that you want to get a business line of credit from. Have you parked enough money with them? Do they see your relationship with them? Is your relationship strong with them? Do you have business checking accounts, business savings accounts, business CDs, MMAs, money market accounts? Those are deposit accounts. Do you have individual retirement accounts with them, IRAs? Those are important, my friend. Talk to me about those things. Does your business have insurance? Does your business has the business bought insurance policies with the bank? Because some banks have relationships with third parties, including insurance companies. So if you're doing business with the bank and you are getting some insurance products through the bank, they're getting some kickbacks. So this is really good for the bank also. It's a win-win situation. Have you tried the bank's merchant services? So when we talk about MPR, we're not just talking about deposit accounts, even though they represent part of the most part of it, but you also need services Okay, have you chosen a specific bank for merchant services, for payroll services? Okay, talk to me about your MPR at the personal level. Obviously, here we are speaking about MPR at the business level, but you could also have an MPR at the personal level. Talk to me about those things. Those are important. Okay, do you have, are you, for example, are you part of the Chase Private Wealth Management clientele? Do you have, so it's all about having strong ties with the institution from which you are trying to get a business line of credit. It's not just about credit score or liquidity, it's about relationship. Let me talk to you about other lenders. So obviously we are speaking about how to get a business line of credit, a large business line of credit from big banks, right? But what if you don't get approved? What if something happens? You know, this is life, stuff happens. You might get approved from other lenders, and you always have to keep your options open, right? Very important. We are trying to be here unstoppable. That's the goal here. So when you think about other lenders, you have Fundbox, which is a great online lender. Okay, the lines here are a little lower, but it's okay. It's okay. It's all about getting the cash that you need, that your business needs to expand, to grow, to thrive, to survive, whatever it is. So for Fundbox, you have loan amounts that go from $1,000 to $150,000. The rates go from 4.6% to 9%, and the term 12 to 24 weeks. So when you think about Fundbox, you're not thinking about 1 year, 2 years, or 3 years. No, they want to limit their risk, which makes sense. So term 12 to 24 weeks. And another one that we love is Credibly. So Credibly is kind of good, especially if you have poor credit. If your business or you yourself as a person has poor credit, you can try Credibly. And their loan amounts, their line of credit amounts also go all the way to $250,000, and the rates start at 4.80%, and the term here 26 weeks. So we're speaking about 6 months here, half a year. Okay, so again, when you get out of the banking context and you're talking about online lenders, they are all of them are trying to cover their ass. They're not giving you a line of credit that is valid for more than a year. No. Okay, so here, but the good thing is if you have a minimum personal credit score of 560, you're good to go. You also have a on deck. We love that on deck. So here the line amounts, line of credit, $6,000 to $100,000. This is really good. But the rates are kind of high. The rates are high here. You're looking at 35% all the way to 47%, and the term 12 months. So those are things you need to think about. What we love with on deck is that they are one of the quickest options. So you get your cash really quick. You get your cash really quick, but you're paying a lot of money also. By the way, I just made a mistake when I said term 12 months. It's actually up to 5 years. The 12 months applied to business loans, but when you're speaking about the business line of credit through on deck, the line of credit term up to 5 years. Okay, and the repayment period 12 months after each draw, and there are some recurring fees that go from $100 to $250 annually, or a percentage of the line of credit amounts. So let's talk about strategy. So this is the part that I love, because at the end of the day, we've done all this analysis. You've heard all this good talk about business line of credit, whatever, all these things. But what do you do? What is the plan? What is the strategy? Talk to me about it. This is a big decision time. Big decision time. I want you to write down all I'm about to tell you right now. If you want to make a decision to decide which bank should you go to get a large business line of credit, with EIN only preferably, but also without EIN if you don't meet the EIN only requirements. There are a few things you need to think about. You want to think about the minimum requirements. Okay, a lot of lenders, a lot of national banks will have strict requirements around personal credit scores or business credit scores. They might want to have some thresholds or some minimum from the annual revenue. So you want to think about that. You want to think about business performance. All right. And you want to think about the credit line details. Please read the fine prints or have somebody read them for you. It's very important. Most products do not require a regular draw, but some might require it just to keep your rates locked. So you want to think about also usage fees, which vary depending on individual borrowers and business borrowers. You have to think about the application process, because big banks sometimes they don't actually release funds quickly. So can you wait, or you want to cash right now? So think about the urgency of the liquidity situation. You also want to think about the repayment terms. This is important, folks, right? Because it's not just about getting some cash from a big national bank. That's kind of cool, don't get me wrong. However, you need to think about the repayment terms also. All these things are important. Okay. You also want to think about, so once you have identified the lender that you want and the product that you want, you want to take a look at the lender's website. Please give the bank a call. Go to a branch. Have a conversation with someone. Okay. Pay attention to what you use your line for, or what you want to use the line for. It's important. Make on-time payments. Everything starts with a conversation. You got to have this conversation. If you want to be unstoppable, you need to be informed. You need to have the intel that you need about the line of credit. And the only way you can get this, by doing your own research, by watching shows like this one, but also by going to the branch and having a conversation with the bank. Very, very important. That way you know exactly whether or not a business line of credit is the product that you need, or whether you can, or whether you need a business loan. Because a business loan is typically great for larger and infrequent business expenses, whereas a business line of credit is better for short-term initiatives. Or maybe you need business credit cards, who knows? All right, folks. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about how to get a large EIN-only business line of credit from a big national bank, no matter what. So step number 1, you need to know the top players, the top lenders in this space. Step number 2, you definitely want to know the requirements of the business line of credit. Step number 3, you need to know the condition of your own business, condition in terms of liquidity, in terms of sustainability, in terms of stability. Number 4, you need to know the assets that you have. How strong are the assets that you have? Number 5, understand the NPR that you have with the big national banks. Do you have a strong relationship with one bank or two banks? Number 6, you need to know the other players, the other lenders, what they have, what they are proposing. And number 7, what is your strategy? What is your plan? Thank you. God bless you. I'll see you next time. But until then, remember, stay marvelous.